Hey everyone, and welcome. Today, we're going to tackle a really fundamental part of tax computation, Intra Head Loss Adjustment, which is now covered under Section 108 of the new Income Tax Act 2025.
So let's just jump right in with a situation I'm sure many of you can relate to. Imagine you're running two different businesses. One is doing great, making a nice profit. But the other one, well, it's had a rough year and ended up with a loss. So here's the big question. Do you really have to pay tax on the entire profit from the successful business and just ignore the loss from the other one?
Well, the good news is, nope. Thankfully, the law has got your back on this one. The Income Tax Act 2025 gives you a way to set off that loss from one business against the income from the other, as long as they both fall under the same head of income.
All right, so here's a quick look at what we've got lined up. We'll start with the solution itself, Section 108. Then we'll break down the rules, walk through a practical example, cover some common pitfalls, and then wrap it all up with the key takeaways. Okay, let's get into the heart of it. Section 108 of the Income Tax Act 2025. This is the provision that lets you make these adjustments and, lower your taxable income for the year. So, the official term for this is Intra Head Adjustment. And what does that actually mean? It's pretty simple, really. In any given tax year, which, by the way, is the new name for previous year, you can take a loss from one place and use it to reduce a profit from another. The only condition is that they have to be in the same bucket, the same head of income. You're basically balancing things out within one category.
Now, this is super important, especially for all you seasoned pros and students out there. Section 108 in the new 2025 Act, it's basically a direct continuation of the old Section 70 from the 1961 Act. So, no need to panic. The new law is about restructuring, but the core principle here hasn't changed at all. Your existing knowledge is still perfectly valid.
Of course, it's not a complete free-for-all. There are some specific rules you need to follow about which losses can be set off against which incomes. So let's break down what you can do versus what you can't do.
So, in some ways, the rules are pretty flexible. Got a loss from your retail shop? You can totally set that off against the profit from your consulting business. Simple enough, right? Same for house property. But, and this is a big but, there are some major restrictions. Think about a speculation business like intraday share trading. That loss can only be set off against a profit from another speculation business. You absolutely cannot mix and match that with your regular business income. And in capital gains, there's a pecking order too.
And the list of restrictions goes on. A long-term capital loss? It can only fight a long-term capital gain. It can't touch short-term gains. And losses from something super specific, like owning and maintaining racehorses, that's in its own little world. You can't set it off against anything else. And please, don't even think about setting off any kind of business or capital loss against winnings from lotteries or game shows. That's a huge no-no. These rules are there for a reason, to keep things fair.
All right, enough with the theory, right? Let's make this real with a practical example. This is where it all really starts to click. Okay, so let's take a look at Mr. Sharma. For the tax year 2026-27, he's got two businesses going, and here's the key: they both fall under the same income head, profits and gains of business or profession. That's the first box ticked. His textile business is doing great. It's brought in a solid profit of 12 lakh rupees.
But on the flip side, his software business, well, it's new, and it's posted a loss of 4 lakh rupees. Now, if Section 108 didn't exist, he'd be staring down a tax bill on the full 12 lakhs.
But this is where Section 108 comes to the rescue. Because both are regular, non-speculative businesses under the same head, he can take that 4 lakh loss from the software venture and set it right off against the 12 lakh profit from his textile business.
And just like that, his taxable business income drops from 12 lakhs down to 8 lakhs. That is a huge difference in his tax liability, and it's all thanks to this principle. It really is a fair system, right? It makes sure you're taxed on the net result of your efforts within that category. Okay, so knowing the rule is one thing, but applying it correctly is the whole game. Let's talk about compliance and some of the common mistakes that people tend to make. Now, this is absolutely critical. After you've done your intra-head adjustment, what if you still have a loss left over? You can carry it forward to future years, but there's a massive catch. If you file your tax return late, you lose the right to carry that loss forward. It's as simple as that. Filing on time isn't just a suggestion, it is essential to get this benefit.
So, let's just crystallize these common errors. Number 1, thinking the basic rule has changed with the new act. It hasn't. Number 2, getting the restricted losses wrong, like trying to set off a speculation loss against your normal business profit. That's a classic mistake and it will get disallowed. 3,
just forgetting to claim it. You have to actually claim the set-off in your return. It doesn't just happen automatically. And finally, the big one we just talked about, filing late. It can be a very costly mistake.
All right, we've gone through quite a bit. So let's boil it all down to 5 clear, actionable takeaways you really need to remember about Section 108. Okay, here is the cheat sheet. Rule 1, you can set off losses against income, but only if they're under the same head. Rule 2, don't get confused by the new number. Section 108 is just the new name for Section 70. The rule's the same. Rule 3, watch out for those restricted losses. Speculation, capital gains, racehorses, they all have their own special rules. Rule 4, remember the order of operations. You do this intra-head adjustment first before you even think about setting losses against other income heads. And Rule 5, and I'll say it again, file your return on time. It's absolutely mandatory if you want to carry forward any leftover losses.
And that's a wrap on our deep dive into Section 108. I really hope this helped clear things up on how intra-head adjustments work. If you got some value out of this, you know what to do. Give it a like, subscribe for more, and maybe share it with a friend or colleague who might find it useful. Thank you for watching.
And just before we go, the usual disclaimer. Please remember, this video is for educational purposes only and isn't professional advice. Tax laws can get tricky, and they do change, so it's always best to talk to your own professional advisor before making any decisions based on what you've seen here.